Yo. Alright, we're back. Fuck. Hold on. G. Alright. Bang. Alright. Yeah. Back. We're back. Alright. So. One second. I just only want a jug. Right overseas. Right overseas. Put your name on my pay chart. Alright, so what we're going over today is the news today. We had ISM manufacturing, PMI, and just ISM manufacturing prices, which is part of ISM manufacturing. It's just a kind of like a subclass of just going over the prices, and we're going to talk about it. So what happened today? It was higher than the previous. So it was. Wait, what was the actual? Did it not come out today? Oh, I forgot to reload the page. Alright, here we go. So both of them were lower. So, which is going to be good for GBP USD either way. Is my only drugs try. So I don't know. Who knows? Maybe that actually didn't happen today. Maybe it did. Maybe it didn't. Yeah. Something happened before it came out, bro. 10. Just kind of went down after that, but something happened before it came out. So, but this is going to be good for GBP USD because with prices down, that means that fuck, I'm forgetting what I was saying. So when prices go up, there's going to be more money in the market, and the prices are higher. There's more demand, more people buying. Dollar gets stronger, and the Fed are and so then the dollar gets stronger. So then the pound is like, look, we're not as strong. So GBP USD goes down because pound against dollar, and so when it's going to be pound against dollar, then that means that the price is talking about the pound against dollar. So if the dollar is stronger, it's going to go down when the forecast is going to be higher. So the actual was 40.2, 5. Above 50 though for the prices is good. That means the market is expanding, and that's good. So now I can see why GBP USD went down today. And it kind of went down all throughout here, which makes more sense. I have to look at this one, what the previous one for this one was. So it wasn't above 50, but the prices are usually going to be more effective because it's talking about the prices. The prices are usually what we want to look at because the prices are for when the economy is going to be more price based. Just talking about things with more prices. ISM manufacturing is going to talk about the manufacturing industry. So that's more of like employment, new orders, slide orders, inventories. But the market right now is going to be based on consumers, consumer prices, and so forth, and that's kind of what the market's driven on lately. So inflation, so it's going to be more focused towards the prices are going to have a bigger impact when those are the leading causes of volatility in the market. I'm gonna be honest, I'm not a pro on this. I've researched a little, trying to remember what they said, but I'm getting better at it. So, of course, I didn't trade today. I'm trading tomorrow. Yeah. So you gotta look at these. You gotta look out for these. Come out monthly. And they're just a big. They can affect everything. Like this is a leading factor in the changes in forex. The big spike or big downwards pull. So you should be paying attention to them and know how they work. Just what I knew was first I was just talking about. You gotta look out for PMI and FOMC and CPI and unemployment claims. Well, do you actually know what it means? You actually know what it's talking about? I know I'm not a pro on it, but now I'm starting to get the basis of it, and I'm feeling more confident about it. So, I'm not saying that I'm gonna start predicting it, but working on it, and then we can see Powell speak. Big boy Powell. So I'm gonna be trading Tuesday, not Wednesday, maybe Thursday. I want to trade Thursday. Oh my god. Damn it. Maybe I'll trade Thursday. Right now it's just looking at Thursday and Tuesday. I kind of want to trade Thursday. But you see, you can't look at this together. Like, you don't have to know, like, why this shit's going to happen and really know about it. So let's look at it. Manufacturing price paid, of course, that. Pushing manners and checks, yep, that. Each monthly. Actual greater than forecast is good for currency. I already explained that. And yes, I told you it was a component of PMI, but reported separately as an inflation gauge. So that's when the market is driven by mostly inflation. So if you look at, that's probably why the market went down today. Greater than 50, it's going to be bad for GBP USD. Greater than 50 is also going to be good for USD to GBP because it's making the dollar stronger. We can see there's more price, there's higher prices in the market, more buying, more demand. Like shit, there's more market. There's more like it's a gauge for inflation and what the Fed's going to do with rate cuts coming up. So you can check on that. And yeah, so when it's the pound versus dollar, prices are up, the dollar's getting stronger. There's more demand in the market. It's going to make the pound versus dollar go down because the dollar's stronger. But that's opposite for USD GDP. And like I said, it's kind of an extra component of PMI. So, when you've been seeing the market has been driven by inflation prices, what are some other words for it? Inflation, prices, consumer prices. You have to look at it as, I think, the ISM manufacturing prices are going to be a little more effective or influential when it comes to the market, because that's what the market's been driven on lately. And you should stay on top of your news. Lock this in. Keep looking at it. And yeah. Bang. Yeah. Wait, hold on one second. I want to see something. I wrote some notes down earlier. One second. Let me see this. Yeah. Okay. All right. Yeah. So PMI is basically like it's gonna focus on market when stronger production, stronger demand, stronger employment. Um, you know, greater economic momentum. I'm writing that down. And the rate cuts are going to happen when inflation is slowing, growth is slowing. You can see stuff like that. So when you can see PMI maybe less than forecast, less than 50 for the prices when it's a priced, when it's a price, uh, like priced, a price set market, and you can tell the ISM manufacturing prices is going to have a bigger change, and you can see the rate cuts are going to happen because growth rate is slowing, employment's going to rise, inflation is falling, and there's not a lot of demand in the market. So yeah, that's about it. Yeah, okay, here we go. Okay, yeah, so if the market cares more about inflation, bank cuts, bonds, then prices paid or ISM manufacturing prices is going to be more influential. There we go. But if market cares more about economic activity, better demand, higher employment, then you're going to see no, fuck, hold on. If market cares about demand, employment, and economic activity, then it is going to be PMI that you're going to be looking at. So that's really it. Let me turn my shit back on. That's mainly it for today. I swear I wrote those down. But yeah, that's everything. Alright. Hey you guys, I'm gonna keep looking at this for about 15 minutes. And I'll do some else. So I know it's a long video, probably boring, but see you on the next one. Peace. We'll be trading tomorrow. I'll do a trade recap when I go home. And maybe I'll even record it. That's pretty good. I'll record it and set a mini link or something so you guys can see it. Alright. Peace.